Hello, it's Robert Miner with Dynamic Traders Group with our weekly video for our Twitter and YouTube followers and subscribers. Here's what we do: about a 10-minute video of a market that's probably in a high probability position within the next few days for a specific trade strategy. This week, we're going to take a look at a market that we look at often. I even updated it briefly last week, but because we're moving into a very critical time where I think there's going to be a great trade opportunity within the next 2 weeks and possibly next week itself, and that's going to be the euro or the dollar. So we're going to take a look at the euro dollar. It's good to keep on top of the euro or dollar, not only because are they great short-term trades, but if we can identify a probable trend that's going to last several weeks to several months, of course that affects many other markets. And besides, I trade the euro all the time, so it's a market I'm on top of, and I'm glad to share this information with you. So what we do in this video is we do kind of a deep dive into one market, and I want to teach you also about the type of analysis based on Fib, time and price, based on Elliott Wave and dual time frame momentum strategies, how we identify a trade opportunity, and then of course specific trade strategies to take advantage of that opportunity. Okay, let's get started. Let's take a look at the euro and the dollar, and hang in there for this video. I got an offer for you at the end of the video that you might find useful. Okay, here we go. So this is the euro weekly data, and it shows the weeks when there were Fed announcements over the past year and a half or so. I'm not going to go over them all. The reason I bring this to your attention is that next week is a Fed announcement, next Wednesday, and typically the euro and the dollar has a very high frequency of making a reversal plus or minus a week of a Fed announcement. Now, some of those reversals are significant, some of them are kind of minor, but the point is, it's such a high frequency that we want to be aware of the trend going into that announcement for a possible reversal. So what we want to look at next week is that if the euro should be making a new low next week, that has a real high probability of completing a weekly, and in this case a probable multi-month low. There's really high probabilities, or high frequencies I should say, when lows are made during Fed announcement. Again, this is 1 week after, this is 1 week after. You can see right on the low, etc. So it's not something that we blindly use, but something we want to be aware of. What's the trend going into the week of a Fed announcement? What's the pattern position, etc. So we want to, for no other reason, be alert next week to that. Let's go to the weekly that doesn't have all those Fed announcements on it. This again is the euro weekly data. A couple things here to keep in mind. For those of you familiar with Elliott Wave, and everybody should learn the simple basics of Elliott Wave, is this decline has just been a textbook impulsive trend, and what's special about it is off of the February high is the fifth section, or the wave 5, at least as I have it labeled, is also subdividing beautifully into 5 waves, and it would indicate that we're near the end of this section, the impulsive trend from the February high, and that has the potential, I even put it at a very high probability, of completing the decline and the impulsive trend from the January 2021 high. So what's significant about this is the low made last week, the prior week to when I'm recording this, was made right in the high probability target zone for the end of the wave 5. So we're at a really significant end of wave target zone. Just a simple parallel channel, which is real typical for Elliott Wave, where we connect the wave 2 and 4 and draw a parallel line from the 3. That's frequently around that area would be the target and the end of a wave 5, particularly when it's right in some price relationships specific for the end of wave 5. And then also, this most recent week was the 100% low to low to low. And usually within about a week or so, either side of that, we complete another comparable low, and a weekly low that lasts a few weeks. Now what we're looking at is a probable low coming up within the next 2 weeks anyway. We've got some time factors that go into, of course, next week and the first week in August. I'm just showing you the basic ones here, but that would be the very latest, would be the first week of August. And that's what the Fed announcement is also telling us, is that usually we make a reversal plus or minus a week of the Fed announcement. So again, just keep this in mind that, boy, everything has come together, including having our weekly, at least the 8 momentum, reached oversold last week or the prior week, and then this week. I'm recording this on Friday afternoon. It's going to make a bull reversal. Now, that's not an immediate trade signal, but it certainly indicates that we're really close to and maybe at the end of that momentum cycle. That's important. So a quick reminder before we continue on, if you'd like to keep up to date and be alerted to when specific reversals are made and signals are made, and for specific trade strategies, check out our DT reports at dynamictraders.com. Wealth of information there. We cover the stock indexes, bonds, notes, of course, the dollar and the euro, Bitcoin, gold, silver, the GDX, and other markets. And every issue is a learning experience. My objective is to teach you how to trade to make your own trading decisions, regardless of the market or the time frame that you trade. Okay, let's get back and look at the details of the euro dollar setup. We always use multiple time frames. Coming off the May high, again, that was a wave 4, and that was actually wave 4 of 5. Now, this section is also subdividing beautifully, at least it appears to be so far, into a 1, 2, 3, 4, 5, potentially. I got a question mark. We don't know if it's going to go to that new low or not. So here's how we use this information for specific trade. Number one, more than likely, the euro will make a new low in the next week or so, probably next week. And if it does that, that will be textbook. 3 degrees, wave 5 of 5 of 5. You want to be all over that if it makes a new low in this price zone for a potential multi-month low. It's not a forecast that that's going to happen. If it should happen, again, it would be just beautiful. And given that the daily momentums just Friday made a dual look-back bear reversal from the overbought zone, more than likely the euro is going to be sideways to down for at least 3 to 4 days. It's not a forecast it's going to make a new low, but if it does, that would be the ideal setup to complete the trend, the impulsive bear trend from the December 2021 high. Whenever we think we have the position of the market figured out by whatever technicals we use, we then have to identify what can the market do to avoid that. So in this case, what can the euro do to signal that that multi-month low is already complete? Well, it can make a close above 1.04060. That's the June 13th swing low close that I got labeled as a wave 1 close. That would be a closing overlap, and it would indicate that this impulsive trend was complete and the low is complete and a multi-week, if not a multi-month low is complete. Great information we got here for specific trades in the days ahead. If you liked what you learned here, be sure to check the subscribe button down below, and I'd appreciate if you hit the like button as well. I'm also open to any comments or questions that you might have related to this video. And be sure you go to dynamictraders.com and check out our DT Traders News membership, where you can sign up for free, get some updates other than these YouTube video updates that we do every week. That's it for today. Robert Miner over and out. Have a safe and fun next week. Take care.